Like I said, returns aren't all created equally. Well, LTVs aren't all created equally as well, because we all kind of gravitate towards LTV. And for those that don't know, it's loan to value. We gravitate to that as our first metric of risk, right? We say, oh, well, what's the LTV, right? And so if you have a $100 million deal and you're financing it with $80 million of debt, it's very simple. That's 80% LTV. And people would consider that to be high leverage. Which it is.
Yeah.
It is, yeah. And it's riskier than doing, let's say, the same exact deal, but at 60% LTV.
And as a matter of fact, sorry to cut you off here real quick, many institutional investors, call it the Starwoods, which we're right across the street from, the Pearlmarks of the world, the PPRs, so on and so forth, probably have a mandate right now from their IC, their investor committee, that they can't probably do a deal with less than 70% LTC, I would imagine.
No, they won't do more than 70.
Yeah, that's what I meant. Yeah, so it would have to be 70 or less.
Yeah, generally speaking, the more institutional funds have a cap on either fund level LTV or deal specific LTV, right? The fund level LTV is a little bit friendlier because they can maybe take a little more leverage on some deals, take a little leverage on other deals, and balance out to their 70% constraint or something like that. But I want to drive this point home because I think a lot of people can miss this. So when you talk about the same deal, right, deal X, and if you talk about 80% LTV on deal X versus 60% LTV on deal X, yes, 60% is less risky than 80%. However, when you're comparing deal X versus deal Y and different LTVs, now things get more confusing because now you're talking about different deals. And so what we're able to achieve through our enhanced NOI at closing is a higher cap rate, a higher NOI. And so even if we're financing with, let's say, 80% LTV, which is high leverage, that's coupled with let's say, a 1.25 or greater DSCR. And a 1.25 DSCR simply means the NOI is 125% of the amortizing debt service payment.